For more on this, I'm joined by Dan McClory. He's the head of China and West Coast investment banking at Burnham Securities. Welcome to the show. I guess let me first get your reaction on all the different moves that the government has done to try to stem the losses.
Well, thanks, Phil, and I appreciate being on the show. Obviously, these moves have not been enough, and it appears as though free market forces are somewhat thwarting government intervention. Because whenever you have far more sellers than buyers, you're going to have a difficult situation. And you've made reference to the fact that $3 trillion has been wiped off of equity values. That's a very, very significant number. So clearly, not enough has been done. And a lot of the retail investors have put a lot of faith and confidence in the government stepping in to help protect their investments. And so far, it hasn't had an effect.
I mean, I guess that brings up a good point. I mean, you have an awful lot of retail investors. I mean, more so than other developed markets. For example, the U.S., you see a lot of institutional clients. These retail investors, are they mentally, I guess, or emotionally prepared to deal with these big drops?
Quite frankly, they're not. And we saw this in the U.S. going back 15 years ago with what we now affectionately call the dot-comedy, or the post-dot-com meltdown. And you had irrational exuberance that led to people making investing decisions that, quite frankly, they wouldn't have made if they'd have stopped and thought about it. After living through that experience, it leaves you with a different mindset, and you go forward in another mode. So I think you're going to have that effect is going to eventually take place. But right now, the challenge is on how to stabilize, how to bring back confidence in the market. And there are obviously a number of things that the government is attempting to do. So far, they really haven't shown an effect.
Okay, now, an outsider might look at this and say, okay, so stocks went from $5 to, say, $15, and now they've pulled back to $10. It's still up for the year. It's still up for the last year. Is it really that bad? I mean, I guess it is if you got in at the top, but to put things into perspective, it's still up a lot for the past year, and it's still up fairly significantly year to date.
I think one of the main differences, Phil, is that Chinese retail investors are prolific traders, and they're coming in and out of the market rapidly and with a lot of velocity. They really haven't adopted a firm buy and hold mentality. So you, in fact, do have a lot of people that bought in at or near the peak and that are now, unfortunately, having to sell on the way down. Of course, they're not happy about that, and this is going to leave them maybe somewhat jaded about the whole experience, and they keep looking to the government for some form of intervention and stabilization.
Yeah, look, I mean, investing is supposed to be first of all, a moneymaker. It should not be a traumatic losing situation, which it has been for many people. And I have spoken to a number of traders on the other side of the pond. And they say one of the problems is you have these margin calls. But the margin calls, for those that are watching, when you have a margin call, you've borrowed money and you've got to sell stock. But if the stock's not being traded or being halted, you can't sell it. That's a major issue, isn't it?
It's an incredibly major issue. You're caught in a no man's land where you need to answer that margin call, but you can't get out because that security is illiquid. And I think one of the other points that we heard from Shanghai tonight is about the high degree of suspensions that have occurred for both Shanghai and Shenzhen listed stocks. It's approaching 50% in both exchanges. And not only is that somewhat alarming, but it also leads us to now not put as much confidence in the uptick in the various indices. So if basically the least healthy of the companies that are in an index are suspended, then what you're looking at is the remaining companies are those who are healthy. So is that index really indicative of what's going on in the market today? I think investors are starting to say, I don't think so.
You made a good point earlier about this no man's land, and I'm going to change the topic here very slightly. Secretary Liu said that he's watching what authorities do in China, specifically on the markets. They're stuck in a very difficult position, right? Retail investors want them to take action to stop the losing, but at the same time, there's a lot of investors that say if you want a proper free market, you have to let the market sort of be liquid and move on its own. Is there a healthy balance? Is it possible? Does it have to be all one way or the other?
It certainly doesn't have to be all one way or another, but this is clearly a transition time. And I think the ultimate resolution is the opening up of Chinese markets, which Beijing has indicated a willingness to do for quite some time now. But having international capital flows, having international institutional investors who can participate in these markets, and to become a bigger force than they are now. Let's face it, this is quite a retail-dominated market in China. and it's going to be susceptible to perhaps even emotional swings. The degree to which China opens its markets and accommodates international investors, I think, is part of the solution to this problem.
For the millions of people that are watching that might be invested in the Chinese stock market, whether you're on the government side or you're one of the retail investors, you have to be a little nervous. 30 seconds.
Absolutely.
What advice would you tell those folks?
Well, this is obviously an important learning experience, and I would equate it to what the U.S. went through during the dot-comedy in the early 2000s. This is going to color the judgment of people. I don't think it's going to take them out of the equity markets forever. I think there is a need for patience. I think there is a need for rationality. I think there is a need to follow some of the leads that the government is taking. But clearly, this is not going to correct itself overnight. I think there are further declines that are on the way, and I think investors are still in for a little bit more of a roller coaster ride.
Oh boy. Dan, thank you very much for your insights on this, a very big story, of course.